Welcome to Mobile Trading Academy. In today's video, we shall be discussing inverse head and shoulder pattern. This is one of the most popular chart patterns which, when used appropriately, can be very profitable. You'll be learning 4 things in this video. 1. What is inverse head and shoulder pattern? 2. What are the types of inverse head and shoulder pattern? 3. How do you trade inverse head and shoulder pattern? 4. Where do you place your stop loss and your take profit when trading the inverse head and shoulder pattern? So these are the 4 things we are going to look at. So starting with the first. What is inverse head and shoulder pattern? The inverse head and shoulder pattern is a bullish reversal pattern. What does that mean? It means that it is a pattern that shows a reversal from bearish trend to bullish trend. So invariably, the inverse head and shoulder pattern is a pattern that occurs after a downward trend, signaling the beginning of a bullish trend. So what are the types of inverse head and shoulder pattern? So we have 3 types of inverse head and shoulder pattern. The first one is the regular inverse head and shoulders pattern. The second one is the down tilt inverse head and shoulders pattern. Then the up tilt inverse head and shoulder pattern. So let's start with the first one, the regular inverse head and shoulder pattern. It occurs in a downward trend where you're having a lower lows and lower highs. It gets to a point that after a lower low, the price makes an equal high, then a higher low or an equal low. We can say at that point that we're having a regular head and shoulders pattern. So this will be your neck, and here is the head, the left shoulder and the right shoulder. So any candlestick that closes above this neck region, we say that there is a break of the neck region, and that is a signal for you to join the bulls and buy. There is a regular inverse head and shoulder pattern. Now let's go to down tilt inverse head and shoulder pattern. So in a down tilt inverse head and shoulder, you have a downward trend making lower lows and lower highs. Then after a lower low, there is also another lower high. However, the next low is a higher low instead of a lower low. Neck region is a trend line connecting this lower high and this lower high. So in this case, we're having down tilt inverse head and shoulder. It is actually a weaker inverse head and shoulder. The strength of the bulls in this case is not always very strong. The third type of inverse head and shoulder pattern is the up tilt inverse head and shoulder pattern. The up tilt inverse head and shoulder pattern is still in a downward trend making lower lows and lower highs. However, after the most recent lower low, the next high now becomes a higher high, and after the higher high we have another higher low. The neck region is connected by an uprising trend line. It's a very strong bullish signal, because whenever you have an up tilt inverse head and shoulder pattern, is a signal that there is bullish strength in the market. So these are the 3 types of inverse head and shoulder patterns that we have. So how do you trade inverse head and shoulder pattern? In any of the types, The first thing is that after the right shoulder has been formed, you allow the price to get back to the neckline and break above the neckline. Now, when price breaks above the neckline, it is not proper to just jump in and start buying. It is good you wait for a retest of that neckline. So when there is a retest, then you can buy at that retest and join the price to move up. Sometimes when the market breaks above the neckline, the market moves some good pips above it. Jumping in at that point will reduce your reward and increase your risk. So the best thing to do is to wait for the price to retest the neck region. Then it will reduce your risk and increase your reward. We are going to see that in our next point, which is where to place your stop and where to place your take profit. The general rule is that the distance that this price is going to move in your favor, that is to the upside, is going to be the distance between the head and the neck. So wherever that distance X is, or that height is, that is the distance you're going to measure from the point of break, and your stop loss is just placed somewhere below the right shoulder, because the right shoulder is a structure, so you just place it somewhere below the structure. So this is a GBP AUD 4 hours time frame. We can observe a very strong downward trend from here. The price have been moving down and making lower lows and lower highs. So looking at this point, as price was coming down, the price made a lower low here and came up here and made a lower high. However, it moved down and made a lower low again and came up and still made an equal high with the previous one. Then price came down and made a low which is also equal to the previous one. Remember when I was explaining the regular inverse head and shoulder pattern, I said that the right shoulder could be an equal low, or it could also be a higher low. So in this case, we are having an equal low. The two lows are equal. Then we can say that our neck region is this point where we have the two, we have the previous lower high and this equal high. We connect it. That is our neck region. So as the price broke above it, the question is, do I jump in immediately and buy? No, you can wait for a retracement of this, so that price will retrace and touch back at this point, then before you buy, and your stop will just be below this right shoulder, and your take profit will be the distance between this head and the neck region. So that is actually how you set your take profit and your stop loss. I hope this video will help you make some very profitable trades. So in summary, we've said that inverse head and shoulder pattern is a bullish reversal pattern that forms after a bearish trend, or that forms in a bearish trend to signal a reversal from the bearish trend into the bullish trend. Then we said that we have three types. We have the regular inverse head and shoulder, we have the down tilt inverse head and shoulder, and we have an up tilt inverse head and shoulder. And we said that the up tilt inverse head and shoulder shows a very strong bullish signal, and we made us understand that you have to wait for a break and a retest of the neck region before entering your trade. And finally, we also said that your stop loss will always be just below the right shoulder, and your take profit will be the distance between the head and the neck region. That is it. So thank you for watching.